about the budget deficit and the balance of trade deficit. The U.S. going off on $35 an ounce was basically because it did not want to trade its gold stock to solve its deficit problem. And that started a movement in which the developed economies began to de-industrialize. Mature products left the shores of developed economies and moved eastwards and southwards. That revolution is what led to Asian tigers and newly industrializing countries, and now we are into the emerging economies paradigm. And from then on, I'm told we're now going to go on from emerging economies to rapidly growing economies. Well, the nomenclature may change, but what has happened is that the real industrial dynamism of the developed economy has been lost now for some 4 decades. And we have now a thriving manufacturing sector in emerging economies and no longer in the developed economies.
Honorable Finance Minister of India, it's a great pleasure, sir, to have you with us at the International Banking Summit hosted by Financial Times and Yes Bank over the last couple of days. Sir, with your approval, when I met you last, I requested you to be present, and you've been very, very kind, given your very, very busy schedule, to be with us through this live video conference. The last 2 days, sir, have been absolutely fabulous in terms of discussion, in terms of the quality of discourse, in terms of the representation of bankers from all over the world, facilitated by Financial Times and Yes Bank, sir. Sir, we have had very, very powerful discussions. The idea behind this whole summit was, let's meet in India, but take India and Indian banking to the rest of the world. And I think, sir, I have reason to believe that we may have struck the right chord. But more importantly, sir, with your very valuable presence, it's most important to hear you and your comments in this very important conference, this very important summit over the last couple of days. So we've had 6 very interesting sessions on most aspects of what is relevant from a global standpoint and what is extremely relevant equally from the Indian banking standpoint, including inclusive banking, social banking, and the impact of some of the deregulation taking place in banking, sir. Dr. Pranab Mukherjee, the Honorable Finance Minister of India, needs no introduction, ladies and gentlemen. I have a very, very long resume, but it may take another 10 minutes. Most of that is contained in your kits. But we must honor a finance minister of our nation who is a decision maker, a troubleshooter, a true leader of people. His experience over the last at least 50 plus years, about the time I was born, is incredibly fascinating. His commitment, his dedication, his sincerity to all the cabinet positions, all the responsibilities, including being on the board of governors of the World Bank and Asian Development Bank, African Development Bank, IMF, and leading politics from grassroots, from West Bengal to every nook and corner, and through very illustrious, enterprising leadership in every role he's played in many, many cabinet positions. Ladies and gentlemen, he is the senior most cabinet minister. And every time he talks, there are solutions to some of our challenges. And India is going through a little bit of a macroeconomic, right now, speed breaker. We have socio-political issues. So we would request the finance minister to say a few words to us and there will be a few questions given the fact that he's got many commitments. Thank you, sir, for being with us.
Thank you, Dr. Rana Kapoor. Very good afternoon to all of you. I am indeed very happy to have this opportunity of joining you at the valedictory session of the first Financial Times Yes Bank International Banking Summit. Even though it is only in a virtual sense, let me begin by congratulating Dr. Rana Kapoor and your partners for organizing this summit and bringing together distinguished panels of bankers, financial experts, investors, policymakers, and regulators to deliberate on contemporary issues of relevance to India's growing financial sector. I am happy to see the themes such as banking reforms, cross-border strategic alliances, rural development, and financial inclusion that you have addressed in your discussion over the last 2 days of summit. The Indian financial sector has seen significant transformation, rapid growth, and global integration over the last decade. The banking sector has shown great resilience in the course of the global financial crisis and its continuing aftermath. The fact that India has not gone through any major financial turbulence as a result of the earlier phase of financial deregulation is a testimony to our consistent view that reform in global standards have to be adapted to the local conditions. Economic reforms initiated during the early 90s have borne good results for the Indian economy. The economy has moved on to higher growth trajectory with improved fundamentals and resilience to external and domestic shocks. Basic objective of the financial sector reform has been to promote a diversified, efficient and competitive financial system with the ultimate objective of improving the allocative efficiency of resources. This has been sought by ensuring greater operational flexibility, improved financial viability, and strengthening of regulatory institutions. The reforms were carefully sequenced in respect of policy instruments and in terms of specific objectives that had to be addressed. We have taken steps in recent months to take this process forward. Legislations have been introduced in the Parliament to address some issues in the financial sector, including insurance, banking, and pension sectors. We have set up Financial Sector Legislative Reforms Commission to review financial sector laws with the objective of bringing them in tune with the current requirements and global best practices. An apex-level Financial Stability and Development Council has been established and is functioning to strengthen and institutionalize the mechanism for maintaining financial stability and improving the inter-regulatory coordination. In the post-crisis period, financial stability has become an integral part of policy discussions and macroeconomic objectives globally. A sound and resilient banking sector, well-functioning financial markets, robust liquidity management and payment, and settlement infrastructures are the prerequisites for financial stability. The second generation reforms currently underway built on the reforms over the past 2 decades. It includes the recent deregulation of the savings interest rate, discussions on mode of presence of foreign banks, and the process to give additional banking licenses to private sector players. These steps seek the transformation of the Indian banking sector into a reasonably strong, diversified, and resilient system with significant opportunities for growth. The evolving circumstances present several challenges in the short to medium term. We need to sustain the momentum of expansion in domestic banking services, even as global growth is weak and is laden with uncertainties. The possibility of systemic impact of sovereign debt crisis in Eurozone countries on international financial markets is looming reality. We also need to overcome domestic concerns, including those related to capitalization issues of the public sector banks and the threat posed by their growing non-performing assets. The aim of Basel III is to improve banking sector stability to absorb shocks arising from financial and economic stress, thus reducing the risk of spillover from the financial sector to the real economy. Basel III also seeks to strengthen microprudential regulations which will help raise the resilience of individual banking institutions in periods of stress. Sufficient cushion is available with Indian banks to absorb the enhancement in the equity and Tier 1 capital requirements as per Basel III. Following my budget speech 2011-12, the government is committed to enable public sector banks to maintain a minimum Tier 1 CRAR of 8%. As banking becomes more sophisticated in a complex, globalized market, there is a need for improving the skill and knowledge set of bank employees. There has to be a constant effort to understand the functioning of the financial markets, best practices that underpin the creation of new financial products, and the related oversight issues so as to promote financial stability for sustained growth. As part of the efforts to ensure convergence of the Indian accounting standards with the international financial reporting standards, a roadmap for convergence of IAS with IFRS for banking companies and non-banking financial companies has been finalized. Financial inclusion is an important development priority for the government. Only about 38% of the scheduled commercial bank branches are in rural areas, and just about 40% of the country's population has bank accounts. We are presently working towards covering around 73,000 villages with a population of 2,000 or more by March 2012 under our Financial Inclusion Initiative. As of September 2011, we have already covered 3,000 villages. Upscaling of financial inclusion efforts is essential for banks as it embodies the potential for augmenting growth prospects in terms of enhancing bank savings and financial deepening. At the same time, it will contribute to a more inclusive development of the economy. Expansion in banking services is a critical ingredient for sustaining high economic growth. Entry of new banks, both Indian and foreign, would increase competition in the banking sector with attendant benefits in the form of improved efficiency in banking intermediation and encouraging product innovation and development. These in turn would contribute to better growth prospects for the banks and the economy. Indian banking has to be receptive to and proactive in harnessing this opportunity. Let me conclude by thanking the Financial Times and Yes Bank for giving me this opportunity to share some of my views with the distinguished participants who have given me a patient hearing. I hope your deliberations at the summit have been fruitful. I look forward to the outcomes of your discussion. I wish you all very best in your endeavors. Thank you, ladies and gentlemen.
Sir, Honorable Finance Minister, this has been, sir, very immaculate, very encouraging, very focused delivery on some of the Indian challenges at present and the focus of banking and financial reforms. So we are very encouraged by what you have said, and as a leader who has experienced every aspect of India's ups and downs, we are most committed and believe that everything that you say will convert to outcomes in the very short term.
Thanks for having invited me here to deliver the keynote on financial inclusion and policy and business paradigm. Now, let me say the financial inclusion is a very hot topic. It is the buzzword. But unfortunately, it generates more heat and sound and less light. It is the most misunderstood concept. And that's why I congratulate Financial Times that they are sponsoring this. I think many of the misconception is sponsored in the society by the breed of Mr. Prabhu Chawla. You see, they are the people they are responsible to convey, and that's why media is participating. I am personally more happy Mr. Prabhu Chawla is here, at least to communicate. Now let me say that I am the most overexposed person on financial inclusion. Whatever I have to say, everybody knows. So I will try to clarify certain issues. You see, financial inclusion is important, everybody agrees, because it is growth with the equity and justice. If we want sustainable development, if we want a peaceful world, peaceful society, then inclusive growth has to be there. I don't think there is any confusion in that. So it is must. And it is also known that without financial inclusion, there cannot be inclusive growth. And that is also accepted anywhere in the world. Third misunderstood concept, it is a problem of developing countries, it is the problem of India, it is the problem of India. This subcontinent, no. Out of 4.7 billion adult population, 2.5 billion adult population across the globe has no access to formal credit and the saving products. So it is not here. More than that, if we take definition by financial inclusion, that is access to banking, financial products and services, and also appropriate products and services in the cost-effective manner. If you say appropriate, entire globe is financially excluded. Then that's why the financial literacy is very important. So I am not going into that. For us, the problem is access is itself a problem. And I don't want to go through how many branches, how many this thing, what is the product, that's all.